Friends, we had talked about what is financial management, what are the aspects of MBA finance, what are the aspects of various subjects of finance. If you remember, in the last lecture we had talked about financial management. That is, it's a trade-off between risk and return. Today we'll be talking specifically about the first subject, that is money and banking. Quite a few times we have been hearing this word in our lives, or rather we have been hearing this word every 15 minutes, every half an hour, every day, every week, month, and so on in every year. And if you see, it's been said a lot of times, money can buy this, money can buy that, money can do this, money can't do that. So when we have been hearing a lot about money, let us try to understand what exactly is money. Some may say कि सर पैसा है, पैसे से ये हो सकता है, पैसे से वो हो सकता है. क्या हो सकता है पैसे से? पैसे से ये चीज खरीदी जा सकती है, पैसे से वो चीज खरीदी जा सकती है. Essentially, what does money do, Essentially, money creates value. Or, due to money, everything, whatever we produce, whatever we sell, whatever we consume, whatever services are provided, they are provided because of value. And that value is characterized by, that value is calculated by money. How do you measure value in terms of finance? How do you measure it? You measure it in terms of value. Now, if I say, what is the value of this pen? I'm not talking about what is the price of this pen. Price, we talk in terms of economics. Value, we talk in terms of finance. If you remember, we have talked about what is the price of this pen? The price of this pen may be 20 rupees. But what is the value of this pen? Say, for example, I can write this much. If you want to write this much, you need a pen that costs you this much. That is exactly what money is all about. Right? If I want to write, say, 10 boards of this type, so you need a pen which will run to the extent of 20 boards, which costs you 20 rupees. That is money. It is putting certain value to that. Now, if we try to understand what exactly is money, we need to understand two things. It's economic system and financial system. If you remember, in the first semester, we had talked about what is an economic system. It's a system of production, resource allocation, and distribution of goods and services within a society having certain value. This all thing having certain value, or which adds. Now, what is that? Economic system is all about production of goods and services, resource allocation. The word important here is allocation. Why allocation? Because whatever you produce, the goods and services are scarce. Remember the concept of scarcity. Resource allocation, distribution of goods and services within a society. Now, what does society mean here? Society means consuming population. Population having certain purchasing power. That is what we mean to say here by society. Economic system, production, resource allocation, distribution. Three important aspects: production, allocation and distribution. Now here also distribution to whom? Those who are willing to give the value that has been stated. That means those who are having purchasing power. What is that? Purchasing power. Distribution. Distribution means not like, okay, we have manufactured 100 units that are going to be distributed in 100 people. That is not distribution as far as economic system is concerned. Economic system predominantly says it's production of scarce resource allocation and distribution of goods and services within a society. This production, resource allocation and distribution, it is adding value to the goods and services that are being produced, and that is going to be consumed by or people who are having adequate purchasing power. This is what more or less we mean to say by economic system. Now, for this system to operate, right? For economic system to operate, you need what? You need a financial system. Now, where are you going to produce the goods? You're going to produce goods with the help of money, right? You are going to allocate the resources. Resource allocation is what? Resource allocation is, for example, if you want to manufacture a car, you would be needing the help of, say, iron or metal sheets, rubber parts, right? All these, they are going to cost money, right? To operate this system, you need financial system. Say, for example, to produce a certain automobile, you would be needing what? Two things: fixed capital and working capital. Who's going to provide that? Financial institutions. And whatever the financial institutions are providing, those are called as financial services. Where this is being produced? Financial markets. Who's producing that? Financial intermediaries, banks. So you need a system. What is that system? Financial system. What it states? A dense network is more important. Dense network. It's not like, okay, you want money, you go to a bank, you get the money, you say to the manager that I want money. He gives you money, you come back. That is not as simple as that. To get credit or to get money, to get capital, you would require what? You would require whether the bank should be in a position to give you extend credit or not. Who's going to decide? The bank is going to decide, right? How it is going to decide? With the help of your credit score. Have you ever taken loan earlier? If you have taken loan earlier, are you in a position, were you in a position to repay that in time? This is what we call it as credit scores. Say, for example, you have a credit card. You use that credit card, whether you have paid the money back or not in time to the bank, that is being decided by your credit score. That gives the bank certain guarantee that whether this person should be given credit, extended credit or not, right? So hence, it's not as simple as that going to a financial institution asking for a loan. What are they doing? They are taking what? They are taking risk. Again, risk. The word risk. No matter however you dislike this word is going to be there, used in all of the lectures, in each and every lecture of finance. They are taking risk. What are they earning? They are earning certain amount of interest. What is this interest? Interest is the return. Right? Now, to go in a different perspective, what is this interest? Interest becomes cost to you. Right? Now, what do? You take that much amount of loan, right? That much amount of loan is what? It is risk for you. So that you can get certain return. Again, even the person who is taking loan is calculating risk and anticipating return. The institution which is extending loan is calculating risk and anticipating returns. So, it's a dense network of interrelated markets. Nothing in financial system works on its own, independently. ऐसा नहीं है कि भाई बैंक अलग चलते रहेगा, बैंक को आरबीआई से कुछ लेना देना नहीं है, बैंक को इकोनॉमिक सिस्टम से कुछ लेना देना नहीं है, या फिर बैंक को किसी के क्रेडिट स्कोर से लेना देना नहीं है, बैंक को मार्केट की हालत से कुछ लेना देना नहीं है. Everything is interrelated. When will banks extend credit? When there is boom in the market. When will banks withdraw from giving credit? When there is recession in the market. Right? It's a different story, right? The government may try to push money into the market. That's monetary policy. That we'll study sometime later. Right? Here we are talking about what is financial system. Let us focus on financial system. It's a dense network of interrelated markets, intermediaries that allocates. Again, important word. Allocates. It doesn't simply give. Okay? Even the banks, or for that matter, financial institutions, they don't randomly extend credit. Capital is extended in the form of credit. Right? That allocates. The word important here, financial students. Always remember, no term here in the financial or in finance is used randomly. Here we are not saving, gives, extends, nothing like that. Allocate. Now what is the basis of allocation? Allocation is done on the basis of merit. Right? Here merit means what? Bank will allocate capital based on its risk-taking capability. Risk-taking capability. It is going to allocate capital. Say for example, a bank might be in a position to extend 5,000 crores of credit. Right? That means what? It is in a position to absorb credit to the extent of 5,000 crores. What are we doing? We are calculating risk. Right? Allocates capital, shares risk by linking. It shares risk. It is not the only one. It is not the only financial institution, or for that matter bank, that is taking risk. What does it do? It spreads. You might have heard this word in investment management. Spread. Right? What is that? You distribute the risk. You spread the risk. Right? Amongst whom? By linking savers to spenders. What does a financial institution do? It collects money from savers. What does it do? It gives to spenders. Right? Spenders, those who take loan. Right? Those who take credit. Right? Those who avail credit. Savers to spenders. How does the money flow? It flows from savers to spenders. A sign of good financial management is when these two are in sync. That is, whenever you need money, there are people who want to give you money. Now, why people are willing to give money? Because there are people willing to take the money, right? When there is a balance between the two, जब हम बहुत बार कहते हैं ना कि भाई रिसेशन हो रहा है, क्या हो रहा है? यानी क्या है? स्पेंडर नहीं है, या फिर इन्फ्लेशन है, क्या है? बहुत ज्यादा स्पेंडर्स है, right? So this is the balance. Interesting world of finance, you know. This is you need to just maintain the balance between this, those who are willing to save and those who are willing to spend. For example, America is a capitalist economy. What is that? There are a large number of spenders. Hence, what does that government say? Government says only spend. They're not worried about inflation. Here, India was a country of savers. Now, in these times, people are saying, all the governors, they are saying, central bank governors, they are saying there has to be a balance between savers and spenders. Savers produce capital. Spenders consume capital. Right? Investors to entrepreneurs. There are people who want to invest money. They don't only want to save, they want to invest. Invest means these people are willing to take more risk. This is savers, they want less risk, more risk. Investors to entrepreneurs, they are willing to take risk. Lenders to borrowers, right? Linking, lenders to borrow. Risk averse to risk takers. Savers, they are risk averse. No, will not take any risk. Somebody has to take risk on our behalf. So what do? They go and save their money in financial institutions. Right? I go and put my money as deposit over there. I get certain fixed amount of interest. I am happy with that. Right? What is that? I am risk averse. I am not going to put my money on an entrepreneur. I don't know whether he's going to save my money, use my money, or maybe ruin the whole money. So, a dense network of interrelated markets intermediate that allocates capital, share risk by linking risk averse to risk takers. This whole side, you know, this part, and this part. These are what? These are risk takers. These are risk averse, this part, right? This part. Savers, investors, lenders, risk averse. These are all whom? Risk averse. So, what does a financial system do? The financial system creates or tries to have a balance between who are willing to save and the people who are willing to spend, right? People who have surplus to those people who are deficient, right? They don't have money, but they have ideas. Here, people have money, again, they don't want to take risk. So what do? This whole money, this whole financial system is a combination of what? It is, this system moves money, right? Moves money means what? Money which has value. Say for example, I might be having 500 rupees. So what can I do with 500 rupees? I can, say for example, I can buy a shirt, I can buy a board, I can buy a book. What are these? I am buying certain things that have certain value. So, financial system is a system wherein you create value on a financial asset. Money is what? It's a financial asset. Whenever you use the word finance, it means valuable asset. Right? So, for example, gold, you say gold is a financial asset. Share is a financial asset. Debt instrument is a financial asset, right? Equity capital, it's a financial asset. Your deposits in the bank, it's a financial asset. So whenever you say finance, you're saying value. I mean, say for example, I put 10,000 rupees in fixed deposit. After 5 years, say for example, maybe I might be earning 15,000 rupees. I will be getting the money back. So what is that 15,000 rupees? It's a financial asset. Financial asset means it's a valuable asset. It's an asset which has a value of 15,000 rupees 5 years down the line. Right? So that is what we mean to say by more or less broadly what is money. Now, it's a system which comprises of financial intermediaries, financial markets, financial institutions, and financial services. Financial intermediaries, say for example, you want to buy a share. To whom you do go? You go to a broker. Broker is who? Financial intermediary. What does he do? He takes money on your behalf, goes and invests. Or for example, mutual fund operator, mutual fund manager for that matter. Who is he? Financial intermediary. He is an intermediary between financial saver or money saver to money spender. Financial markets. Where does he go and invest that money? Mutual fund manager. He goes and invests the money in stock market. Stock market or the banks or the financial institutions. So wherever these kind of things they exist, they are called as financial markets. Financial institutions, banks, credit companies, right? Credit score companies. These are what? These are financial institutions. How do they provide? Say for example, somebody buys money, somebody buys shares on your behalf. They charge a fee. Somebody invests your money in mutual funds. They charge some money. So these are what? These are services. And all these things, financial system essentially operates due to flow of money. What does this, how does this move? This moves due to flow of money. And because of flow of money is moving in a financial system, the economic system moves. Right? It is possible to operate. Here the whole money, say for example, if you want to produce goods, you go to where? You go to a financial institutions, seek credit. They will provide you credit. Financials, they are going to provide you services. Right? Where do you go and extend? You go and extend in financial institutions, financial markets, through an intermediary, right? So this whole system runs this bigger system.